What happens when you turn off an economy for 3 years and try to start it up again? Well, in the case of China, it doesn't go very well. I'm going to show you why they are going and moving towards deflation and potential collapse at this very moment, and how it's going to spell disaster for the rest of the world, potentially as we move into the next stage. We are in a momentum right now of weakening, of lesser growth than was expected, and that has put additional pressure on the central bankers and on the governments to take on more debt, try to finance this debt, and at the same time, not cause a recession. You got a problem right in front of you, and I'm going to show you all the details right here, right now. Let's begin. Here we have it. China slides into the brink of deflation, adding stimulus urgency. The CPI was 0% year over year in June. That's the lowest in more than 2 years. Producer price deflation deepens to the worst since December of 2015. So imagine that's their data. Who knows what the real numbers are? You look around the world and you see that these statistics are always manipulated in their favor. So we could even expect that it is worse than this. We never really know. That's the number they provide us with, and you could see the definite trend. That shows us there is a significant reason to worry here and now. But we're going to talk about what the changes are for you as an individual and your family. You would like to know that because everything that goes on in China does have an impact where you live. Maybe it's in Europe, maybe it's in the US or Canada. This is very impactful to you. You got to understand this, and I'll tell you why here in just a second. China's inflation rate eases to zero. You could see that. This is both the PPI, that's the producer price index, and the CPI for consumers, and that has of course declined. We've seen a lot of that. This has been a real mixed bag when you look at what's going on in China, because it depends on what sector you're looking at and so on, but overall they've got some serious problems here and now. And that's what goes on when you lock down for this long, as well as the fact that they were expected to grow continuously no matter what. And no country can do that. There are always going to be bumps in the road. There are always going to be issues. And I talk about this from all sides. I know people want to have just one perspective, but I'm only going to cover what I see and bring you the facts. China's consumer inflation rate was flat in June, while factory gate prices fell further, fueling concerns about deflation risks and adding to the speculation about a potential economic stimulus. And that's something that I believe was not discussed enough over the last while. The risk of deflation is very real. You got to understand what happened. 2020 hits. All of these countries around the world, what did they do? What did they do? Well, of course, we know that they started adding massive stimulus, the most stimulus we've ever seen in history. In the case of China, they didn't do that. They locked down, but at the same time, they had so much economic output because everybody was ordering all of these things. The factories were just on order constantly. They couldn't get anything. People that were making the raw materials, the factories and things, raw materials, they were needed more than ever before. Their imports in China were going up too because they had to manufacture so much. Shipping was going crazy. They couldn't get enough. All of that was exported to all these countries. But how many pairs of Lululemon pants do you need? They were just like sitting on millions upon millions upon millions of these Lululemon pants. And I get it. They wanted to order more because the shipping was having delays and stuff. But then all of that started sitting in warehouses in the United States. China's warehouse actual inventory levels started surging. That was a factor that's going on right now. At the same time, we're seeing the same thing in the United States. Okay, you got all these retail establishments closing down, but at the same time, you're seeing inventories rise. Big problem. That's a big signal. Look for this. For you, the individual, quick little tip, inventory levels. But understand why that inventory is rising. Is it an expectation that they're about to sell that? Or is it that they can't sell? That is one very big indicator of the consumer, not the dollar. They always want to show you how much the consumer is spending. That doesn't work because inflation, as you see it right now, all the prices are going higher. Of course, you're going to be spending a lot of money because everything costs more. But if you look at inventory levels, those start to climb, people aren't buying what they did before. So that's the tidbit I want to share with you right now, give you some value. Let's move on. I want to give you this as well. You could see the leader of China getting serious on boosting private sector as economy slumps. Chinese leader has vowed to treat foreign investors better. Positive signals come as China's post-2020 recovery flags. So this is important as well because the whole world, it wants to put more money into China. At least, maybe not right now, but overall, the overall trend is if you open up, we're going to bring money in there. But this has scared them, locking down for this period of time. Now the business is saying, I don't know, I'm going to open up maybe my business, maybe a few operations. I'll do that in Vietnam. I'll do that in India. Yeah, I get that. But now what's happening here is they need to open up because they need that foreign investment, but the country has to make guarantees to these investors or money isn't going to flow in. It's just not going to happen. But if they start to say that, okay, you're Apple, let's say, you want to own that factory, you want to own the supply chain, you want to do it all on you don't want government intervention in there in any way. The way it works is the companies need to have basically a representative inside of those businesses that the way it works. I mean, they can control it. They can have the final say and all these things. The companies don't like that, especially if they're a foreign company. Of course not. They want to have control. They want to say, what, I don't want that. I want to operate outside of that country. And so obviously that needs to change in order for that foreign capital. So if China wants to grow, they're going to need to open up. That's what I'm saying to you here, because you can't just do stimulus inside of the country. If they do, watch out. Because as all of these other countries were doing stimulus, China didn't need to do that. They started to reverse, but they're only doing a small amount. In the event that they go wild, watch inflation. And not in a good way, okay? They're looking for inflation, but my goodness. A $28 billion wave of selling pressure imperils China's stocks. Cash is locked up in Chinese mutual funds and faces redemptions. Investors are already frustrated over losses despite long lockups. And so that's what's going on right now. We're going to see some serious selling pressure as soon as you open the floodgates. I've seen this myself, by the way, where there's been some companies that say, okay, we're going to lock this whole fund up. We're not going to allow that fund to open because we know that people are going to start to sell. So we just say, okay, no more redemptions. And then, of course, the investors are so angry. They're so angry because they thought it was liquid, but it's not. Remember that any fund is never liquid. It's only up to the discretion of that who controls it. So they would say, okay, but a year later, you're going to be able to pull some of that money out. It gets to a certain level. We'll allow investors to pull $1 billion out. As soon as it gets to $1 billion, they cut that off. Now you got to wait till a future date. You don't know. This is happening right now in China, showing extreme weakness inside the financial sector as well. Let me give you some other stats. You can see the CPI and the PPI. PPI is widening big time, which does suggest that the CPI then follows it. Okay, that's important. So that means that we can get much more deflation in the next month or 2 or 3. Let's keep an eye on that. Stay tuned to the channel. Hit that like button at least. It's right next to the subscribe button, which will basically notify you when all this data is coming out. I'm going to bring it to you. So just hit that, okay? Look at this. You could see the unemployment rate for age 16 to 24 is up and away over 20%. And that has been increasing year after year after year. Not a good sign. What are they doing right now? Are they discouraged? Or is there just not enough jobs? We've got a demographics problem. I mean, there's a lot of issues. Okay, so let's talk about metals. Let's talk about resources. This is something big inside of China, of course, but everywhere too. EU is pushing China to narrow the scope of metal export controls. So we've had China go out there and basically say, we do not, oh, you're going to do this to us with the semiconductors? All right, we're going to push back because we got the rare earth metals. We are doing all these things. We're refining those rare earth metals. Okay, well, we are going to put curbs on our exports. But Europe is saying, hey, no, don't do that. Let us have some of that, and they're talking about what they want to do and so on. Concentration of EU raw material supplies from China. Look at this. Heavy rare earth elements, 100%. My goodness, the reliance on China. Magnesium, 97%. Light rare earth elements, 85%. Lithium, 79. Okay, look at lithium in that case there. Batteries, okay? All of the products, computers, your cell phones, your vehicles, everything. Everything is using a lithium battery or lithium element, in some fashion today. And we're talking about 79% of that, the vast majority of that coming from China. So you can't just say, okay, let's just go to Vietnam, let's just go to one of these other countries to do business with that, because you just can't. There's just not enough supply, and there just isn't enough refining capability. So this is what China is doing to try and maintain status quo. Stick with us. But if they're shutting the door, this is going to be a problem. This could actively, make the problem worse for them and their growth. If China is slow, watch out, because that then affects the entire world. I'll tell you why. Okay, we'll look into that more. Chip leaders head to Washington to lobby for China rules relief. Anybody who's invested in all these Nvidia companies and everything else, they are really desperate, okay, because they need the Chinese market. They need it. Absolutely. So if you can't sell your chips, as they mentioned here, Intel, Qualcomm, Nvidia, they're going and they're saying, please don't screw us over. If this goes through and they put more restrictions on, and this, there's just no selling to China for the most advanced chips, watch out for these stocks. It's going to hit them hard. Why? Because that's the froth coming off the top. All these investors speculators put all that money inside of these companies. Now they can take a profit. So they're willing to sell that. Hey, I made 200% over the last couple of months. I'm willing to sell a bunch of my gains. That's it. Watch this very closely. It's a geopolitical thing, but it's also something that relates to you as an investor, okay? And we have this. China controls minerals that run the world, and it just fired a warning shot at the US. Beijing's export restrictions on 2 minerals this week show that it's willing to use its dominance to rock Western supply chains. This is actually from July 7th, but I'm just showing you it's all connected here. And that is really important that they're hitting each other back and forth. I'm concerned about it, because this is what happens. You have the tariff wars, you have the taxes, all these different things that go back and forth, and it's like it adds on top of each other. China's first warning shot on export controls causes a 27% jump in the price of gallium, a metal vital to tech industries. I'm just trying to show you this from all levels, all depths. Pay attention very closely, okay? China's LNG, liquid natural gas, imports soar despite the global price dip. Isn't that interesting? We have something that's been going up, like it was going up like crazy. You're seeing a slowdown potentially in China, and yet they are more importing. Do they expect the price to go much higher? Are they just trying to be more self-sufficient? A lot of ways to look at that. But I wanted to show you that because they are importing. Maybe they need that energy. Maybe they want to be a little bit less reliant on certain countries or something. It's up in the air why they're doing so. We could speculate. But ultimately, I know for sure that what we have seen in the last little while has been that they seem to be stockpiling a lot, grains and other things. Okay. And this is just talking about the de-globalization, as some suggest. However, there are those who think that is re-globalization minus China, and that different factories are being opened up in other places. I have said this before, where it's not exactly the case, because it really depends on what you look at it. Like companies like Apple can do that, but smaller and mid-sized companies cannot do that. They can't open up in India and Vietnam as well, because the logistics, the supply chain just is not good in these other countries as well as it is in China. It's like, depending on the country, 15 to 20 years ahead. So if you want to actually maintain a business that needs and pulls billions and billions of dollars in, you can't just move that. It's just not going to work. So the real point that I want to make here is, if China's slowing down, that means the whole world is slowing down. If China has a problem, that means the whole world has a problem. Their growth, the growth that we have seen in the Western world, has really been put on the back of China. The manufacturer of the world, we're shipping cheap. We are doing things that you just can't do in other countries. They shipped all of that labor overseas and made it possible for things to run the way they do in the rest of the world. If they've got a problem, this impacts you. Imagine the prices that you pay for everything, all kinds of different goods, everything. People, they don't realize they buy chicken made in the USA, okay? It's not. In many cases, that ultra processed type food, it goes to China and it comes back. Maybe it was grown in the US. Those chickens, they go over to China, they get processed in China and come back. If you can believe that, I mean, it's crazy, but that's what they do. That's the system. That's what's been set up today. So I'm trying to tell you about this. It will impact you. It will affect you. And there are things that you can do. I talk about that on, so many videos. I've got my playlist to look at. I've also got my Discord. If you see that right here, Discord, I've got a whole bunch of tips in there and I'm adding to it. I'm trying to do my best on that, as well as in the mentorship. We talk about all these things that are coming. The mentorship, if you want to take a look, there's some data in there if you want, but that's something that it's part of a small group, small class that we have twice a week right now. And for those interested, just take a look. I'm not trying to sell you on that. What I'm saying is that there's a lot of information available to you for free in the Discord. The link is in the description. I'll see you next time. Take care.